Hello everyone, good morning. Let me welcome us to another exciting morning market review from Rally Trade. My name is Emmanuel, so we're going to start shortly, but let me be sure that you can hear me. So please, if you can hear me, I would like you to just indicate in the chat room. Okay, I can see you there. Thank you. Once again, uh, this is Rally Trade Morning Market Review. I'm reaching you from the beautiful city of Port Harcourt. My name is Emmanuel Udogu. So I think we have just few persons in the room. So I'll just give a little time for more persons to join us. So that will be maybe 2 or 3 minutes for more persons to join us. Okay, so by this, so you can use the time to get your chart ready, maybe everything that you need for trading ready, because we are going to hit the market really hard this morning. Thank you very much. So guys, this will be a good time to start. Once again, let me welcome us to Rally Trade Morning Market Review, MMR. So we do this every morning, okay? Every trading day, Monday to Friday. Right? So it's one solid. So I want to believe you can hear me now. So let me welcome us again to another exciting morning market review. This is Rally Trade Morning Market Review. So we do this every morning, Monday to Friday, right? Every trading day in the morning, one solid hour of market analysis, 8 a.m. to 9 a.m. So it's a section where we get to analyze the market for you, give you tips, tricks, and of course, reviews and previews of what the market will do, okay? So, and of course, when we see live trade or live signal, we can still go ahead and take the trade. That's what we do here. So I think we're going to start immediately. So we have good numbers right now. So we're going to start. All right. So let's start now, please. Let's start from the events, right? The fundamental events that we're looking at. So just like we always do, we like to start from the fundamental websites. Then after that, we can go straight to our charts. Okay. Okay. So I still believe you guys can still hear me. All right then. So let's open our browser right now. So I'll just open my browser right now. Go to Forex Factory, or we can use investing.com, or we can use tradingeconomics.com. So there are several websites. There are several websites that we can use for this. Okay. So this is forexfactory.com, right? So you can see my screen. I've been able to share my screen. So we can equally use investing.com. Okay, so if you just type on your browser www dot, okay, let's do this one because we'll be using Forex Factory for some time now. Let's do this one. So www dot investing.com. So it opens up something like this for you. Then, of course, you can just click on at the top there, you will see economic calendar, right? Economic calendar. So I'm doing this because sometimes Forex Factory may be working on their website, okay? So if Forex Factory is working on their website, you may want to still use other uh, website for it. So this is investing.com. So pretty much the same thing, right? Okay, so this is the news event for, as you can see today, right? So you can check that for yesterday, that's past, tomorrow, and of course this week, and of course next week, and all of that. So you will see the time of the news. So one advantage here is that it gives you a countdown time. One advantage here is that it gives you a countdown timer, right? So that means it tells you uh, 5 minutes to the news, 3 minutes to the news, and all of that. So all of this. So I think I am back. I was having some technical issues. I want to believe you guys can still hear me. Okay. So all of these are the time of the news. The currency the news will affect, the volatility expected. So if you go to the bottom part, okay, let me be sure you guys can still hear me. No audio. Did you say no audio? Please check. Check if you can hear me. The rest of us, please, can you hear me? You can see my screen. Can you also hear me? Okay, fine, fine. You can hear me. You can see my screen. That's wonderful. So I think I have to continue now. Thank you for saying audio is good. So I'll just continue. Okay, thanks for that. So this is so if you go to the bottom, you get to see the legend. So you can see the stars there at the volatility. So low volatility expected, 2-star, medium volatility expected, 3-star, high volatility expected. So usually we want to focus more on the maybe 2-star and of course more on 3-star. Okay. So then of course this is the event, right? Or if you like the caption of the news, then we have the data aspect of the news, right? So this is the previous data, the forecast data, and of course the actual data. So the news we are expecting right now is in 45 minutes time, as you can see, 46 minutes time, and that news will affect the European euro. As you can see, it will affect the European euro, okay? Okay, so that is just a speech, right? It's a speech, so which means there is no data. We're not expecting any data. So that means in 46 minutes time, you might just see the euro start moving, okay? But that's a moderate or a medium volatility news, okay? But for today, we have a high volatility news that will be coming up by 4 p.m., as you can see, by 4 p.m., okay? So that will be consumer confidence, right? So that will be consumer confidence by 4 p.m. And that news will affect the United States dollar, okay? So please, you want to keep an eye on it, okay? So you want to watch closely on it, okay? Very important. So what do you do by this time? By 4 p.m. Means if you have a trade already running, so what you need to do is make sure that trade have stop loss and take profit. Very important, okay? If you have a trade on any of the USD pair by this time, 4 p.m., that trade should have stop. Most traders trade without stop loss and take profit. Several times I get to interview traders. Guy, why are you trading without putting stop loss and take profits? Most of them will say, I get to sit with the trade, I get to babysit the trade, but you cannot effectively babysit your trade, okay? Because you have to stand up, go and do other things, okay? So even if you're babysitting your trade, even if you're sitting still with your trade, that means you want to observe the trade to run from the beginning to the end. Now, that is usually not the best approach to trade, right? That's usually not the best approach to trade. The reason it is not the best approach to trade is because um, while you sit still and watch the trade, all of those micro movements of the market, up and down movement, I mean, now it's going to be playing emotions, right? And of course, why if your emotion is heightened while trading, it means you're not going to do well, right? You're not going to do well. It means you'll be too quick to spoil your setup or to put your hand inside your trade. I mean, you have placed a trade instead of you to sit still, relax, and expect the trade to run. So any small move just against you, just a little bit, the guy will just think the market is actually going to hit his stop loss. So the guy will just maybe step into the trade and maybe close the trade prematurely. And the trade has not really matured. And the guy has closed it because he's afraid. So most times one of the disadvantage, even though it has advantage, right? So, but one of the disadvantage of babysitting your trade is because you might just put your hand inside the trade and of course spoil the trade, so which is not good. So just give me 1 second, please. So guys, let's continue. So you don't really want to babysit your trade, okay? Except you're scalping, right? And scalping means you should be on a lower time frame, right? A much lower time frame. So you can even use 1 minute time frame, or you can use 5 minutes time frame. So that means what you're looking at for should happen very fast, immediately. Okay. So if you're scalping the market, I mean you are doing sharp trade, 10, 15, at most 20 pips you're looking at for, then you can be able to maybe sit on your trade, right? Now, but not sitting on your trade for 4 hours and of course 6 hours. Come on. Now you understand that very well. Okay. So now if you don't have any trade running by that 4 p.m. also, please by this 4 p.m. then you want to take advantage of the news, right? So even though observing this consumer confidence over time is not as the impact is not as high as maybe CPI and of course NFE, but then it can still spring up some surprises. I mean, move very well. So what you want to do is by that 4 p.m. or before 4 p.m., 5 minutes, 15 minutes to 4 p.m., you want to sit on your trade. Now you can use maybe you can use buy stop and sell stop, right, around the current market price, maybe 10, 15 pips away from the current market price. So that is what you can do, okay? Or you can just maybe use a lower time frame and of course follow the market direction. So I think that's what we can do on this fundamental website. Now for my newbies, let me still go to Forex Factory. So you go to www.forexfactory.com for those joining us for the first time, forexfactory.com. So it opens up like this, right? So these are the two websites very popular among traders for fundamental events. Okay, so today being the 28th, right? Today being 28, Tuesday, right? November. So as you can see on Forex Factory, the high impact news is on red. Okay. Now we have okay, all of this is for tomorrow. Okay, so that's all we can cover for now. Or if you have your question, please you can just paste them. Okay, you can barely hear me. Can you hear me now? You say you can barely hear me. The rest of us, please, can you hear me? Because I'm really
yes, I can hear you. I can hear you
right now. Please, can you hear me?
Yes, I can hear you. I can hear you.
Yes, we can hear you.
Can hear you.
I love that response. So please, if you have loud and clear, okay, that means for you that you're not hearing me, please, you want to check your network, okay? Thanks for doing that. Okay, now we are done with the Forex Factory. Let's go straight to the chart. Let's look at the technical analysis side of things, right? Very important. Now the market has been playing up and down games, right? But as a trader, you need to sit still, right? Of course, sit still, and of course, do your directional bias, right? So don't allow the up and down movement of the market to scare you away. So always trade with directional bias. That means you should always have a bias, right? Now, if you have a bias means the market is going up or down. And that is where the word trend comes from, right? Having a bias about the market. So you say this market is trending upward. Okay, so if it did trace downward a little bit, call that retracement. Okay, so let me switch my chart right now. Let me switch my screen rather to the chart. So I've been able to switch to the chart right now. I believe you guys can still hear me. You can see my screen, you can hear me, then let's ride on, okay? So this is MT5 right now. So let's start from the USD index, right? The USD index. So this is H4 time frame on the USD index. So we have been carefully following this index, right? Of the dollar. And of course, the USD index is simply, it measures the strength of the dollar, right? The strength of the dollar. So it literally tells you what the dollar is doing. It literally tells you the strength on the United States dollars, right? I know most often than not, most traders have their trade based on the United States dollars, right? Or around the United States dollars. Very important. All right, so from what we can see here, the dollar has been nosediving. I mean, it has been breaking structures to the downside. It has been tapping all of the liquidities at the recent low. I mean, it has been breaking structures to the downside, That means that is what we call a downward trend, right? So the dollar has been trending downwards, sir, right? On the H4 time frame, even on the H1 time frame. So this is impulse to the downside for the newbies here. So get to understand this, and it retraces to the upside, right? Now that retracement should not go higher than the previous high, and of course it respected that. Now the next time it's coming, like it should be able to trade below this low. So that means this low is a targeted liquidity, right? So that means in trading you need to know your target liquidity and your protected liquidity. By target liquidity, I mean where the market is targeting, right? Where the market is driving towards. The magnet that attracts the market, right? So the market is being attracted to a particular area. No, trading is kind of it seemingly looks simple because it's just two directions, up or down, right? Up or down. But guess what, sir? the market is always attracted to one direction, right? To one direction, right? So once you know the trend of the market, then you can tell the direction the market is attracted to. So once you have defined that this trend is going downward, of course, you can tell that it's always attracted to the recent low. Okay, so this is a low here. So the market keeps moving and taking away, taking off this low. Okay, so the next time it moved down, I want to believe you guys are still with me. The next time it moved down, you can see it carefully took out this low. Okay, that's a break of structure, right? Break of structure to the downside and form a new low. Then the next time it trade upward, of course, we expect it to trade upward because it needs to give traders a much cheaper price, right? Or what we call a premium price for itself. Okay, so it traded upward to this point. Now, if you notice, it did not trade above this high, right? It failed to trade above this high. So it stopped somewhere here. Then, of course, it started going down again. Now, why it's going down? We're expecting you to trade below this low. Let me ask you, sir, has it traded below this low? You can answer that question for me. Let me pause a little bit and make sure that you guys are following it. So, of course, after establishing this low, it started trading upward. They started coming down gradually. Let me ask you, has it traded below this low? I would like to pause a little bit, then of course take a response from you. Let me please go to the chat room and tell me if it has traded below this low. USA index, H4 time frame, has it traded below this low? Let me look at the response. Somebody say not yet. Yes, it's trading below that low. Are you sure? Or my screen or my chat is different from your own chat? Come on now. So I think if you look at the different answers we've gotten here, we can see that so if you look at the different answers we've gotten here, we can see that those saying it has traded below the low are more than those saying it has not traded below the low, right? So it's like a kind of a democracy now. So I think the yes have it. All right. Now, those of us just joining us, I can see that the room is getting larger and larger. Those of us joining us, this is Rally Trade Morning Market. I will do this every morning, 8 a.m. to 9 a.m. My name is Emmanuel Odogu. I'm reaching you from Port Harcourt City. All right, now let's continue really very fast. So let's see what I consider below the low. So let's remove all of this diagram to make it easier for us to comprehend, because the target is for you to trade below the low, right? It is for you to trade below the low. So I'll just drop a horizontal line there. Okay, look at the line I dropped. So the question will not be, sir, this is the low, right? So the question will not be, let me zoom into the area, make it very big. So the question will not be, now look carefully, as this price traded below this low, of course, the obvious answer will be yes, right? So actually, it has tapped this liquidity, right? It has tapped it, it has tapped it, it has tapped it. So that is one of the way to know the directional bias or the direction of the market, right? So it is called a downward trend because it keeps tapping the liquidity below the recent low. Of course, you can see that this is the recent low of this particular time frame. Even if we drop down to a H1 time frame like that, so we're going to see the same thing. Okay, so it has tapped it, right? So having tapped it, we call that the break of structure. So the market has broken structure to the downside. So it has really tapped it. So what will happen after tapping it? So two things can happen. So it is either, now if the momentum is very strong, it can still continue on its impulse. Of course, you know, this leg that actually tapped is called impulse. It's an impulsive leg. Okay. So if after tapping it, it can still continue on its impulse before we expect a retracement, right? But guess what? If the momentum is not that strong, right? Now it can just retrace. But as you can see here, there was a gap here, right? So that gap also signifies pressure to the downside. That's a gap down. Okay. So that means this might still continue weakening to the downside. Even though most of us were expecting US to be strengthened, right? So, but from what we are seeing here, this might still continue weakening to the downside. It might. All right, now let's leave here. Let's leave H4 time frame. Let me drop down to H1 time frame most of my traders are trading on the H1 time frame, right? So just the swing traders maybe stay on the H4 time frame, okay? Now USD, now if you look at the H1 time frame, let me remove all of this drawing. Please, what I'm trying to do for you right here, it is what will make you a technical analyst. Of course, you want to become a technical analyst, right? You don't just want to be following signals, right? Remember, teach a man how to fish. It's always better than giving him fish, right? You will agree with me, okay? So that's what I'm trying to do for you right here. Now, on this H1 time frame, the schematics is almost the same thing, right? It's pretty much the same thing, but a little bit different. Okay, now this is impulse to the downside, as you can see. Of course, this is retracement to the upside. This is retracement to the upside, right? Then, of course, it retraced again and gave us relatively equal highs, right? But then let me just ignore that for now. Then, of course, it's impulse again. It took out this low. So you can see the same thing is happening on the H1 time frame. The market is always targeting the recent low. It took out this low to form a new low, yeah? So let me use this as my new low. And of course, it retraced again to the upside. See where it stopped, right? Then, of course, it impulsed again to the downside. So even on the H1 time frame side, this thing is pumping to the downside. So what are the first signs we are expecting? We are expecting to know that, this thing is started going up, because guess what? Traders all over the world are looking at for this market to start trading to the upside. I'm telling you, they are expecting USD to bounce back. Come on, our darling USD. Come on. You have to fight back, right? I know most traders have been not seeing maybe negative, right? Because they have a big equity, right? So they have been not seeing their negative, expecting this thing to turn back. Guess what? What is the first sign we're expecting? Now, right, clearly, you can tell anybody in the world right now that USD is retracing, right? So this is a retracement leg. So it is very important to know what is happening. This is a retracement leg. Now, if this retracement trade above this high, this is for an intraday trader, okay? And up to 90% of new traders or 90% of traders in Nigeria are doing intraday. Intraday means they would like to take their profit in a day, right? So they don't really like to stay long on the market. So now, look at this high. So the market has been respecting all of the recent high. And of course, the market has been destroying, breaking all of the recent low, because that's where the liquidity is. And of course, the liquidity drives the market to that point. So if this price can trade up and up and up, the challenge is for it to trade up and trade above this side. So we call that a shift in the market direction. So we are not seeing a shift until you see a shift. That is when you say the market has started trading upward, right? That's when you say USD index or the dollar is now very strong, right? For what we are seeing right now, the market is only giving us an impulsive leg, sorry, a retracement leg for a premium price for a more dump, right? So I can use my Fibonacci retracement. I will draw from this high. Why this high? For those of us still battling and struggling to understand how to use Fibonacci, I'm drawing from this high because this was the high responsible for breaking this low or for tapping this liquidity. So that makes it a strong high. Okay, so I'll draw from that high to this low right here, right? Because now you can see it is okay. Let me zoom a little bit to the area. Very fine. So you can see this leg is the retracement leg. So it has tapped my 50%. So but it is gearing towards my 61.8%. So these areas are the areas traders will be looking at for as a premium price, because the market is going down. If the market was going up, it's called discounted price. But right now, since the market is going down, since we're on a downward trend, we call it a premium price. Okay. So these are the area traders will be looking at for to continue shorting the dollar. Okay. But guess what, sir? If they do that, their stop loss will be here, because once this high is broken, then of course it signifies strength in the dollar. Okay. So I want to believe during the course of this week, the dollar will actually try to bounce back. I'm telling you. So either today or maybe tomorrow next, the dollar will actually give us a shift, right? Or a change of character. Now, please, having done this, I want to believe in right now you understand that the dollar is weakening, or the dollar is still weak. It's still weak. It's still weak until it has clearly broken this high. Okay. Now let's start from Euro US. I want to believe you actually understood all of that explanation there, right? Okay. Just go to the chat room and of course let me know if you actually understand all of those things I've been explaining. Just let me know if you got some value from all of this explanation, or maybe you still did not understand it. Thank you. I can see you there. Okay, let me just pick my face. Okay, I can see you. Thank you, thank you, thank you very much. Okay, you say no. The grace is sufficient for you. Okay. Oh my God. I'll drop my number. Okay, at the end, so you can still ask me. I'll drop my WhatsApp number. Okay, for the first time, you're getting the concept of Fibonacci. Okay, thank you very much. I really appreciate that. Okay. So I'll drop my WhatsApp number, so maybe you can still maybe call and maybe chat me up. I can still do some expansion. So, okay, let me continue very fast because we don't have time. So, let me start with Euro USD, right? Euro USD.
Yeah, your graph is not showing, please.
All right, guys, let's continue. So on Euro USD right now, let's see what we got here. So Euro USD has been going up, right? Okay, let's not waste too much time. Let's just look at it clinically and of course with technical analysis bias. So as you can see right here, this is going up. So there is no need for me to start pointing break of structure to the upside. You already understand that very well, that this thing is going upward, right? Now, even my moving averages are clearly telling me that this instrument is trading to the upside. But guess what, sir? We are clearly seeing this high, right? So the market printed this high for us. And of course, the market gave us what we call relatively equal highs, right? So the market has printed for us relatively equal highs. So what does it relatively equal highs do, right? So number one, take note, sir. Number one, relatively equal highs in the direction of the trend. I mean, the trend is going upward, right? And of course, these highs, this double top, of course, is on the high side, right? I mean, it's printed at the direction of the trend. That's what I mean. So what it normally does is that, so it tries to give traders, right, all over the world, the mindset that the market has hit a strong resistance. That means it's going to turn from there. So that is the first bias, or that is the first inducement it creates in traders, right? So that it has hit a point where it's going to turn. So what most traders start doing is they start selling. So whenever they see relatively equal highs, and of course it works, but it doesn't work for the long term, right? Except that is seen as the point where the market it will now reverse, right? So if that is now the reversal point, of course, then it will hold. Now, but guess what? The trend is stronger than the double top and all of that shit. Okay. So you can see it printed double top here. As you can see carefully, it printed double top here. The next time it moved up, it took out that double top, right? So anytime the market is trending in a particular direction, it normally always print out a double top. But then guess what? For an intraday trader, you can take advantage of that, right? So, I mean, you can make a very small, very short profit there. And of course, then continue, okay? Now let's drop down to H1 time frame. Then let me give you some signal there. H1 time frame. So on this H1 time frame, the same thing. Guess what? We have seen a double top here. So we have seen a double top here, right? So it was after that double top and the market started retracing, right? So I will use my Fibonacci and then I'll just give you the signal, right? So I'll draw from this low, I'll draw to this high. So this from the point A, right? I'll draw from the point A to the point B. So I'll draw from the point A to the point B. So see where I will stop, right? So you can see this market has given us a 50% retracement. But since this trend is massively going upward, so I'll be looking out for this area, right? So I think I have seen a particular area here. So there's an area here, right? That I'll be looking out for just around my 61.8%, right? So I'll be looking out for this area. So I would like to see what we call a change of character here. I mean, I would like to see the market clearly pushing to the upside, or I would like to see on a much lower time frame, that would be 5 minutes time frame or 15 minutes time frame. I would like to see a bullish engulfing, right? So guess what, sir? If you're hearing that word bullish engulfing for the first time, please quickly write it down, because wisdom demands that whenever you hear a new thing, very profitable to you. So what do? You quickly write it down. So you're going to ask any other person that is trading around you, or you're going to ask me later, right? So once you see a bullish engulfing inside here, or maybe any of the buy signal here, so we're going to take our buy to continue. So if we are buying around here, then our stop loss has to be around this low, because once this low is taken out, then we are really diving or trading to the downside. Okay, except it's only a liquidity grab. Okay, so once this low is taken out, sir, we are going down. So that means I'll be giving you kind of two kind of signal here. So if the market for today, right, or even during the course of this week, right, trade below this low, I would like to sell, right? So if it trades below this low, I would like to sell. But guess what? If it trades towards this area, I'm continuing my buying. So let me give you a buy signal, right? So I would like to buy, just like we did last time. I think last Tuesday I was here by God's grace. So I think we gave some pending order trade, right? I want to believe. Now, please, when we're giving pending order trade, please, it is very important that you take those trades, right? Because those pending order trade we gave later got triggered, and of course, gave good profits, okay? So please, when we're giving pending order trade on this platform, please take it very serious, okay? Now, I'm going to give you a buy signal around this area. So 1.09389. So if the market can trade anywhere inside here, and of course, please take note, I must see a bullish signal inside here before I'll take this trade. But that's 1.09389. So around this area, I would like to buy. Of course, my stop loss will be here. Then my take profit will be targeting this target liquidity up here, okay? And that will be take profit of 1.09641, okay? 1.09641. So trading is very simple. It's not that hard. We don't want to do complex analysis that will lead us to analysis paralysis. We don't want to, we don't want to analyze to the point where we are now paralyzed, okay? So we're just trying to keep it very simple. So we can see this retracement is dumping, right? So we call that a retracement until it finally breaks below this low, right? So if it taps this protected liquidity, because this area should be protected, right? Of course, this area should be the target. So if it taps this protected liquidity, it's the first sign of a shift in the market direction. Now, I think a lot of questions. Excuse me. Okay, I think I can see your messages. Okay, you say you chatted me and I did not reply. Okay, please, sorry about that. Continue chat again. Then I'm going to reply this time around. Okay. All right. So now that's for Euro USD. Let me do GBP USD really quick here. So for GBP USD. For GBP USD, okay. So for GBUSD, I would like to give now this is, if you look carefully, this is upward trend, right? This is upward trend, but you can see the way the price is massively showing you that it's falling, right? So most times it can show you something like this, and of course, but please, if it did not break this low, that means, guy, we are still going up. If it did not take out this low, so it has to take out this low. So for those of us doing scalping technology, right? So you can still actually jump in with a sell, right? But guess what? For those of us doing intraday trading, and of course, swing trading, we want to see that the market trade below this low, right? Why this low? This low, it was this low that puts up this relatively this equal highs here, right? All right then. So what can we do? So you want to look out for a sell signal if this low is taken out, right? If this low is taken out. Now that may not be today, maybe it can even be tomorrow. But if this low is taken out, so you want to start selling, right? But for now, I would not want to buy immediately. I would like to see what we call a change of character. I mean, the market start trading or start moving to the upside. Okay. So, okay, I can see your questions, right? So let's look at USDJPY, let's look at US 100, please. After this, then we can jump to that, okay? So what do I mean by change of character? Now, if you are on H1 time frame, HM30 time frame, you want to drop down further to maybe 5 minutes time frame. So something like 5 minutes time frame, right? So what you want to see before you pay, because it's an upward trend, right? It's an upward trend, so you don't want to buy immediately. So what you want to see clearly, so you want to see a structure that looks like this. So it should first give you it should break above this high, right? So this is a lower high here, and of course it's trying to print a lower low. Okay, so it should break above this high, right? That means the market should trade above this high. So by trading above this high on a much lower time, if you notice, I've dropped to 5 minutes time frame, right? So I will now see we are trading on the M30 or H1 time frame, but I have to drop to a much lower time frame, M5 time frame, to see that it has broken above this high, and of course it has printed another discount for us. Maybe it has traded again before I would like to buy. If not, I'm not buying. If not, it means the market is going down. So when we say buy, so these are the things we are looking for buy. But for those of us starting this instrument, as you can see, this is fresh starting here. Of course, I want to believe all of you have fresh right? All the all over the place. So you can see this house pointing down, of course, you're going to be selling, right? Of course, you're going to be selling. It's starting, of course. Let me look at USD CAD. Or should we do USD CAD, right? Or let's do, okay, you have said we should do USD. I can see you there. You say, God bless you. Thank you very much. I hope you guys can see him. Excuse me. Oh my God. Now you say let's do USDJPY. Okay, fine. Fantastic. Let me honor your request here for USDJPY. Okay? So USDJPY. Where is my USDJPY here? Okay. So this is my USDJPY. Let's bring it on board. USDJPY on the stage, right? So probably you have a trade. Probably you have a trade here, right? That's why I see let's do USDJPY. Okay, that's fantastic. Okay, you're the only one saying my audio is not good enough. Sharon, I can see you there. Sorry about that. Please, you want to check your internet because I'm really on top of my voice right here. Okay. Okay, but I'll try to increase it further. Okay, now on USDJPY, guys, let's do some analysis here before we can jump in, right? Or before we can give the signal, right? So clearly this instrument has been trading down, right? Because the first thing you want to do is, now this is the M30 time frame, right? Which is good for intraday traders. Okay, now clearly this instrument has been trading down. Now let's see what H1 looks like. Pretty much the same thing. So let's stay with the M30 time frame, right? So clearly this instrument has been trading downward, as you can see, but not for a long time. By that I mean, see now, if we get to start doing some little drawings here, so you can see, break this structure to form a new low, right? And of course, it retraces to the upside. Now it did not take up this high, right? Then of course it impulse again, took out this low to form a new low, it retraces again. Okay, that will not permit us. Okay, let me just draw it. But you know, drawing this thing and usually take, but drawing it is what makes it clearer. I know that it makes it clearer. So this is another impulse, right? Another impulse equals to the downside, right? And of course, this is a retracement to the upside. See where it's toppled. Then this is another impulse again to the downside. So if you're on a buy trade, you want to keep the buy because I have clearly seen a change of character here, right? Clearly seen a change of character. By change of character, I mean the market has actually traded above this high, right? So actually, on now, please, this is for intraday traders, please, right? This is for intraday traders. I've clearly seen a change of character. By change of character, I mean the market has clearly traded. So guys, I've clearly seen a change of character. By change of character, I mean the market has clearly traded above this high, right? That's traded above the high. So if you have a buy trade, please, you want to stay with that buy trade, it's good, right? Now, if you don't have a buy trade, now let me tell you what to do. Now, the market traded up, right? If you watch, it respected this high a little bit. It gave us a double, relatively equal highs there. And of course, I don't know if you check very well, it actually punched above it a little bit, right? So it tapped it a little bit. Now that first tapping is a sign. It's a sign. It's a sign that the strength is coming back, right? On this particular instrument. Then, if you watch, it gave us a little discount, right? So actually the buy trade for this particular analysis is supposed to start from here. Come on now. So this is where the best entry signal would have been, from here. I hope you guys are following. Now, this is where the best entry signal would have been. But guess what? We can see jumping with a buy at this point, okay? Now, please, this analysis is for USJPY. So I would like to enter. Now, see, if we are buying because it has broken this high, right? So two things. So it is that way we enter a straight buy here, or wait for it to retrace further inside this area, we can buy again, okay? So I will enter a buy and then start buying there. So just like I always do, if you have been following me up, you know that I normally enter with a smaller lot size. That I'll wait for it to give me much retracement. So if it gives me a higher retracement, so that higher retracement or more retracement would be to retrace into this my point of interest. So this area is called point of interest, right? So, but guess what? Most times it may not give you that opportunity. It may just start trading to the upside, right? So of course, for this particular trade, my stop loss will be below this low, right? So this is the low. So I can use this low, right? Or I can use this low. Either I use this low or I use low, depending on your risk tolerance, right? So you know what I mean by risk tolerance. You do know, but if you're hearing it for the first time, sir, wisdom demands you write it down. So please take your pen now. Please write it down. Right, risk tolerance. Okay, so you will need to have your own risk tolerance on your trade, right? So that means your stop loss actually depends on you, right? It depends on how much risk you can tolerate. Then of course my take profit has to be this same distance, so all times 2 of it, right? All times 2 of it. So I'll keep my take profit here. Okay, you called our attention to USDJPY. Thank you very much for that. So we have taken a trade. So taking a trade means I have accepted the stop loss amount, and of course I have accepted the take profit amount. So of course, let's move on to So let me mute everyone. So I've done that so that we can have. So you said we should do okay, you said we should do UA. Okay, let's do gold. So we are going to do gold, right? Then we'll look at oil before US 100, before US 30, before D30. We are going to cover all of this as long as the time will permit us, okay? As long as time will permit us, we're going to cover all of this. So guys, let me look at gold rate week. Gold rate week. Now, gold. So, okay, the last time we were here, we saw that gold printed. Now this is gold on the, okay, let me drop down to H4 time frame. So the last time we were here, that was last week, we saw that gold printed a gold. So we saw that gold printed relative equal highs, right? So at that relative equal highs, we expected a retracement. The next time it went up, took other highs. Okay. So on the H4 time frame, gold. Guys, I want to believe you can still hear me. On the H4 time frame on gold, let's look at what gold looks like. So on the H4 time frame, guys, this my moving averages are 51 period and 50 period moving average. As you can clearly see, the market is trading massively to the upside, right? I mean, you don't want to think anything you want to think or envisage, right? Or speculate. But the best way to trade is to trade what you see on the chart, right? So, what the chart is telling us, this is the last high we saw, and of course we got another impulse, a massive one that took out this high, right? To bring this new high, and of course all of this here, the market trying to break until it breaks this high again. Okay, I'll use my key up from this low. Why this low? This low is responsible for taking out this high. So I'll go from that low to this high. Excuse me. Go from this low to this high, then of course now it has not given us a very good replacement, right? So the swing traders, you may still want to wait a little bit. It has not retraced very well to below 50%, right? Below 50%. Now let's look at what intraday will be thinking. So let me go back to H1 time frame. And of course, from H1 time frame, I can go for that M30 time frame. So for guys, for today, we saw a gap up here, right? So after the gap up, you can see that it traded to cover the gap, right? So this gap up is a sign of for intraday traders, please. This gap up is a sign of pressure to the upside, right? So that means gold is invariably telling you that I am still trying to pump further. I'm still trying to move further to the upside. Now, but guess what? It has printed for us what we call relatively equal highs there, right? Relatively equal highs. So what we can do right now, so again, all over this place can be attempt to be a support, right? The support. So on this M30 time frame, guys, we are seeing that this market, this is the very first or the very early stage of trading inside the range, right? So because one of the challenge of trading range is for you to catch it very early, right? Catch it very early. It's for you to be able to catch the range very early. So so if this should trade If this should trade to this level, then of course we're expecting a buy from here. We're expecting a buy from here to trade again to this level. Now, trading back to the level, it may just break this level, right? It may just break this level, right? So instead of a buy, I would even prefer a sell, right? But that sell will be a risky one, right? It will be a risky one. But guess what? If you can take it, why not? Your stop loss, it will be a risky one. Your stop loss would be just above this high. Your stop loss will be just above this high, right? If you're selling. But my ideal kind of trade here would be a buy, right? For a conservative trader, please. A conservative trader is a trader that the money is trading with probably house rent is inside, children's school fees is inside. So you want to trade the conservative method, right? By conservative method, I mean you want to wait until the price gets to this support before you buy, right? Because we have cited clearly the very early sign of what we call a range bound market. Okay, so you would want to buy somewhere around here, right? Around 2009. 2009.19, right? You know, because if you do that, your stop loss will have to be below this low. You want to use a tight stop loss or even keep it at this low. So if you're buying at 2009.19, then your stop loss will have to be 2005.53, right? Then of course, please take note, if this is a range, then once the market, of course, it's a range, as you can see. Now, once the market trades towards this high, you want to do a sell, right? You want to do a sell with a very tight stop loss also at this point, right? So this is the analysis for gold. So since we have identified a range, right? We have identified a range. So you want to trade inside the range only at the support or at the resistance, right? So you want to do a tight stop loss here. So if the market trade again to this level, so you want to sell 2016.77 stop loss just above it, right? Tight stop loss to keep the risk very low. Now 2018.63, right? Same thing. If you're buying here, please, of course, you know this particular entry here for the sell would be your take profit, right? So please, I don't know if you think the audio is bad. Let me check this. I've been able to mute everybody. I've mute everybody. Please, if you miss any part of this, our analysis, you would want to go straight to YouTube, right? So we are also recording live on YouTube. So if you just search for Rally Trade on YouTube, please do well to like and subscribe to the channel, right? So you may want to, you can watch it again. So if you miss any of our money markets review, so you want to just go straight to YouTube on your phone or your tab, on your PC, just go straight to YouTube, search for Rally Trade on YouTube, you'll see it, All right, so you're asking for the take profits. The take profit is 2016.77, right? The entry for a buy is 2009.19. So we are trying to trade inside this range. So please, once you understand that we are trading inside the range, then you want to, you already know how to trade it, okay? All right, let's continue, guys. Once you understand we're trading inside the range, then trading it will be a very simple one. Now, you are asking if I have a personal YouTube channel. Okay, please, you can reach me on that. I do have one. So, but please do well to watch this on Rally Trade YouTube channel, right? Just search for Rally Trade on YouTube, right? Now, please, I'll drop my number at the end so that I think I can complete that question. All right, guys, we have done good. Let's look at What instrument do you think we can look at? Let's look at US 100. So many persons have been saying US 100, US 100. It looks like we have a good number trading US 100. So let's look at US 100 right here. Of course, you know, on these indices, if USD should show some strength, right? If USD should show some strength, you expect that the indices will drop, right? Now, let me go back to that hello. Let me go back to that our USD index we analyzed earlier on. USD index, and see what it has done for us. So you can see that it's still retracing, right? It's still retracing on the H1 time frame. But all of this movement to the upside is what intraday traders will call USD is now very strong. It's not very strong. Of course, you can trade it and make profit with it, right? But guess what? You want to be very sure that the strength will last, right? You want to be very sure that that thing you're calling strength will last. So that is the reason for doing all of this analysis. So you want to make sure that the market trade above this high, right? So we are still observing it. We are still watching it. We want it to trade above this high before we can bank very well on that strength, okay? Now, even if we check this, let me share my screen again. Even if we check Finviz, let me share my screen again. Even if we check Finviz, yeah, let's see what Finviz is telling us about the strength of the dollar. So pretty much early this morning it was much weaker. So you can see where the dollar is right here, right? Of course, you know, instrument towards the far left are the strongest, right? So right now, AUD, Euro, as GBP seems to be the strongest, right? Yeah, of course, instrument towards the far right. But then, if you watch carefully, you notice these numbers also do change, right? So they can increase, they can also decrease. So USD, now you can see just now, USD just moved, right? From this position to this. So that means USD is becoming stronger, right? USD becoming stronger. So that means on Euro USD, we should be expecting it to break below. Should be expecting it to break. You should be expecting it to break below the low. Therefore, on GBP USD, the same thing, right? So we are seeing some strength. So it's actually moving. It's actually moving. So let's switch back to our chart. So it's already 9, guys. Let me just do this US 100, then I'll wrap it up here, please. It's already 9. I want to believe you were able to get some value, right? You were able to get some small value. Don't worry, great things start small. You're all doing well. Now on US 100, right? On US 100, what can we see right here? So we can see that on the long run, on the H1 time frame, on the long run, what you can see here is upward trend, right? So very clear. So the first thing you want to do, you want to establish. So the first thing you want to do, you want to establish the trend. We call that directional bias. So you want to have a bias. So we have established the bias. The bias is upward trend. Now, but guess what's that? So this instrument has been trading has given us a range bound market here, right? So one of the things you want to do is for you to identify this range as early as you can, right? So to identify this range. All right. So clearly we can see that this is a range, right? Now, see, without drawing this, it may be hard for you to even know that this is really in a range, except you draw it, right? So that's why it's very important for you to draw this thing. It makes it easier and simpler. So you can see that the strength we saw. Okay, you said we should identify the relationship between indices and the dollar, of course. If the dollar is becoming stronger, you expect the indices to drop. So if dollar is weak, you expect indices to rally, to trade to the upside. So that strength, that little strength we saw in the dollar, or the dollar is trying to pick up right now, that is why this is, we have this drop, right? But guess what? It's dropping towards this support right here, right? So you would expect that it will find it difficult to break through this support, right? So if you have a buy trade and this is falling, you may want to still leave that buy trade open. If you have a buy trade on US 100 and this thing is falling right here, you may want to still leave that buy trade open. I'm repeating it. The reason is we're already seeing a resistance, a support level that has been tested several times, right? So we can call that a verified support that we tested over and over again. So that means if US 100 should fall further, it may find it difficult to break. We find it difficult to break below this low, right? So on this low, you may want to look out for a buy signal, right? So once it breaks out of this support level, then you may want to consider buying by looking out for a change of character. So we have explained change of character several times. So that means this is H1 time frame. You may want to drop further to M15 or even M5 time frame to look out for the first sign of change of character, right? I mean, the market starts trading to the upside before you start buying. So please take note. We are not saying you buy immediately, right? So we are saying if you trade to this level, you may drop down to a much lower time frame to look out for the first sign of trading above the recent high. So if you trade above the recent high, so that's a break of structure to the upside. So that is where you can now buy, okay, on this support. Otherwise, this strength, if the dollar becomes so strengthy, it might take out this low and of course start trading down to the downside. So if you're buying here, of course, you know that your stop loss will be below this low. Please take note, whenever I'm trying to give you a signal, I used to explain very well that if this happens, that is when you do this. So that is how trading is done, please. So if you're buying anywhere on this level, for my explanation, anywhere here, of course, stop loss will have to be very close, right? To mitigate the risks, right? Stop loss have to be very close. So guys, it's already 9 minutes past 9. I think I would like to draw the curtain here. Let me drop my number. Most of you have so many questions. Some of you have so many questions. So please, my name is Emmanuel 09026264507. Emmanuel Odogu. So if you like Odogu, of course, you will not be wrong. So 09026264507. Please, that is my
Odogu of Forest.
Thank you very much, guys. I hope the market will be with you. Of course, profits will be with you. Please take down the number. I've got the number for you. Emmanuel Odogu. Save it, please. That number is also on WhatsApp. Please do well to chat me up. Okay. You can also call during official hours. Guys, thank you very much. See you tomorrow. Please try to join us again tomorrow on another solid 1 hour again from 8 a.m. to 9 a.m. Thank you, guys.